Welcome to the Real Estate Pros Show, where we interview real estate investing professionals from coast to coast, as well as the service providers that serve the real estate investing industry. Our goal is simple: share what's working now to help you improve and scale your business to the next level and meet the pros that can help you get there. Real Estate Pros is powered by Investor Fuel, America's leader in helping real estate investors and professionals build the business you need to live the life you've always dreamed of. Let's start today's show. Property insurance for real estate investors doesn't have to be difficult, but it does need to be there to protect you when you need it. MyInvestorInsurance.com not only provides insurance at 15 to 30% cheaper than traditional agencies, it's built specifically for real estate investors like you. You can set up an account in about 2 minutes, get quotes on properties, turn on and turn off insurance for your fix and flip or rental properties in around 2 minutes without having to talk to anyone directly, all through our portal. There's no better way or faster way to make sure you've got the coverage you need to protect you, and no more lengthy policies either. Once you're set up, you're billed monthly and prorated by the day for however long your policy is active. It's powered by MSI, the third largest independent MGA, with 1.5 million customers and more than $1 billion in cumulative premiums written. Get set up today in about 2 minutes at myinvestorinsurance.com/fuel.
All right. Hey, guys. Welcome back to the show. I'm your host, John Harcar, and I'm here today with Glendon Grose. And what we're going to talk about is traditional banking models for investors. Remember, guys, here at Investor Fuel, we help real estate investors, service providers, really all real estate entrepreneurs, 2 to 5x their business by providing tools and resources to build a business they've always dreamed of and allow them to live the life they've always wanted to live. Glendon, welcome to our show.
Thanks, John. I appreciate you having me.
Yeah, man. Appreciate you taking the time to come out and share some stuff. And I'm excited to talk about the traditional banking models because, like we mentioned off air, most folks think, or most investors think hard money, private money. So this will be definitely another resource for them. But before we get into all that, get into the weeds about that stuff, tell our audience a little bit about you, kind of where you came from, your background, and what got you here.
Yeah. So my background originally was in hospitality, restaurants, for about 20 years. Brief stint in the military, and then got right into restaurants and pivoted from that to the mortgage industry about 8 years ago. Worked for a couple different banks, currently at Movement Mortgage. We are the, I think now, 6th largest retail lender in the country. Huge company, does a lot of really awesome things, super blessed to be there. And I operate out of the Northern Virginia, DC market, but I am licensed in 8 states on the East Coast.
Got it. So you started out in restaurant. Did you own the restaurants? Did you manage restaurants? What did you do?
I did everything besides own a restaurant, and that was the decision. Was at some point I hit my head on the ceiling and was like, either open your own restaurant or find something else. And so I got married and decided to focus on that marriage as opposed to marrying that business in the restaurant industry. So
right.
Smartest decision I ever made, I think.
So what? Because there's a lot of stuff out there you could have done. I mean, what about mortgage interests you? Or got you interested?
Real estate was super curious for me. So I was thinking about diving back into it. I didn't want to start all over. Going back to school or something like that and getting some entry level thing. Working some 9 to 5. Didn't want to be behind a desk, but also being a real estate agent wasn't really appealing to me. Mm-hmm. So had a couple guys that had transitioned from the restaurant industry into mortgage that were mentors for me.
Cool.
Kind of guided me through, and then at one of those, just kind of like make a decision and dive in head first and see if you can swim. And so did that right before 2017, and have been doing pretty well in it so far. It's a great industry. There's awesome information. Real estate in general, I'm sure, watching some of your podcast episodes, there's the different directions that people can go and the niches that you can kind of dive into, and building wealth, from my background, growing up, military family, enlisted military family, not super wealthy, and then learning later in life just the power of real estate and building generational wealth and what it can do.
Stop living on an island and join the #1 mastermind in America for professional real estate investors. Investor Fuel is a community of hundreds of the nation's top investors working together to build stronger businesses and better lives. In addition to the amazing community of real estate investors acting as a board of advisors for one another, Investor Fuel members have access to 100% funding on purchase and repairs for our members only, a health insurance program, and benefits and discounts that more than pays for the membership of most of our members, meaning it's actually costing you money to not be a member of Investor Fuel. If you're looking to scale your business and build a business that allows you to live the life of your dreams, please visit investorfuel.com today and book a call with our team.
For veterans, for those that may not think that they have an opportunity, man, it really can change their stars. So I really love that aspect of it, and have really fostered that kind of community of building wealth through real estate.
I love that. And before I forget, thank you again for your service. So was there a family history of real estate within you, or was it just something that you kind of fell into? I mean, you mentioned the mentors and stuff like that.
Yeah, no, it wasn't anything that if anything, I wish that I had learned about it earlier. I think that passing on that knowledge to, future generations is huge because, I didn't get started in real estate, purchasing my own home until, my mid 30s. And I wish that I had done it 10 years earlier, and I wish that I had 10 more properties by this point. It's one of those hindsight's 2020. But no, I didn't. My parents didn't buy their first home. We actually grew up in mobile homes. But they bought their first home when I was a junior in high school.
Okay.
And learning what I know now about, just again, going back to the veteran thing, the power of the VA loan and how much time they missed by not investing in that sooner. Things like that where house hacking could have existed, and, you move up. And my brother now is in the Navy, and, he's bought and sold 4 or 5 houses through deployments and things like that, or
nice.
New duty stations, and changed his trajectory and his wealth status. So it's huge.
Now, well, and that's what I love about real estate is, I think you said it earlier, there's so many ways to make money in it. Are you investing in real estate, buying properties now, or are you strictly just doing the mortgage side?
Yep. So I've got one investment property now. We're looking for a couple opportunities this year as well. My wife and I started our own separate company for real estate investing.
Oh, cool.
We're looking for our first fix and flip this year. We're looking for a buy and hold, and then we're also looking for a Airbnb property.
Are you going to use hard money?
Depends. Depends on the situation.
Depends on what your company will lend you.
Exactly.
So, you got one property. How did you find that one? How did you go out and did you do lead? Did you have callers? Did you buy leads? What did you do?
So we house hacked it. So we actually bought that as our primary first, and then within 2 years bought our next primary and just pivoted that one into an investment property. Refinanced it into a lower interest rate right before we moved out of it, and set it up for success.
Got it. What have been some of your struggles as a landlord?
Not a ton of struggles yet. I mean, just the basics of, replace the hot water heater. We got some roof things we're working on now. We've transitioned now through a couple different renters, and just kind of learning the different, it was funny. The first renter we got, we wanted to be super safe. So we got a couple that just sold a house, and we're like, okay, they've been homeowners before, they actually ended up being a lot more difficult than the renters we have now that are probably just serial renters that will probably live there for a long, long time.
Right.
So they actually broke lease on us early because they decided they wanted to buy again. And so it's kind of one of those where you think somebody is a perfect renter, but it's not necessarily the case.
Yeah. And the more you can keep long-term renters, that's obviously going to be the best. So where are you looking for these new properties? Same in Virginia, same area around you?
It depends. Our area is tough for fix and flips. There's not a lot of margin right now. Prices are high, competition is high.
Mm-hmm.
It's a very educated market here, so it can be a little challenging. So I'm looking, West Virginia, it has a lot of opportunity growing west and south of the DC market. Our market's kind of expanding.
Yeah.
And so there's opportunity there for some of these houses that have been,
If you're looking for consistent, high-quality leads, look no further than Investor Machine. Investor Machine isn't just another agency. It's the most sophisticated, data-driven lead generation company on the planet for real estate investors, and serves the role of being not just a lead generator for your business, but a marketing partner that is helping you achieve your goals along the way. Go to investormachine.com to learn more and schedule a call with our team today.
Underutilized or haven't been touched in years.
Deferred maintenance.
Correct. Yeah. So there's opportunity there. For the Airbnbs, we're looking for areas that we visit anyway, and just a way to kind of, write that off or have a property that we can stay when we want to go visit family, or places that we, and again, one of those where, I don't really care if we make a ton of money off it right now, but just kind of getting in and getting into a pattern of it and practicing and maybe using it as kind of a learning opportunity.
Yeah, build that generational wealth.
Correct.
Is your wife all on board with the whole real estate deal too?
She is. She loves it.
Sweet.
She's dove in head first. She's probably more into it than I am at this point. So
what does she do for the business, for that part of the business?
She's very much on her company is very big on admin systems and things like that. So she's big on building up the systems. She's a spreadsheet, whiz, that kind of stuff.
Invaluable.
She also loves the hunt. She'll go and drive around and find properties that she thinks of, or look up on the internet and just go through deep dives into areas, neighborhoods, air DNA, stuff like that.
That's awesome. So what do you see as your plan for the real estate business? I mean, are you going to continue to obviously you want to scale that and then kind of get out of the mortgage game, or what's your plan for that?
At some point, I guess, I don't think, I want to get out of this anytime soon. I've only been in about 8 years. But, I think the goal with us, and I think most people, is eventually work less hard,
Yep.
Not grind through this as much. Because of the way that I had kind of grown my career, I don't have the 20 plus years from 20 to 40 where I built up a huge, nest egg or anything like that. So real estate's going to kind of be my lean where, hopefully I've got, income coming in, residual income coming in that kind of is my retirement plan, where we can have, 10, 20 doors that provide, a pretty steady source of monthly income that we can kind of use to plan retirement and things like that once we're ready to step back a little bit.
Nice. Okay.
Yeah.
And you're actively right now looking for your next flip, your first flip.
Correct.
Have you flipped a house before?
No, we have not. We've worked with some people on some. I've helped on the financing side of things. We've done some, silent investing and put some things into some people's hands to help them do it. But we haven't actually been hands-on ourselves yet, so we're looking forward to it.
Why do you want to flip it? Why not just maybe buy something that's more turnkey and just have a rental?
Just the experience, I want to see if I like it or not. If it's an absolute headache and it's way too contentious for us, then it'll maybe be the only one we ever do. But I'm a firm believer in try everything one time, give it a go, and see if it's something you're good at, see if it's something you like, see if it's something you're terrible at. Just a curiosity thing, and more than anything. I've got a couple guys up here that do both, and I don't know if you ever had his name's Omni Casey. He does the Cash Flow Breakfast Club. I'll connect you with him. He'd be a good podcast.
Yeah, I'd love to have him on the podcast.
He does a ton of stuff, and one of the things that he taught through some of the communities here is sometimes you can use the flip to finance your buy and hold, and you can kind of just keep moving the money back and forth. Great for tax write-offs depending on the timing of it and things like that. So, just kind of want to see if that's something that we can do, and if not, then we would most properties I'd look to hold, again, unless you're looking to flip something to get some liquidity for that next hold. So
got it. Okay. All right. And then how many properties are you looking to buy? Like, what's your goal?
So I'm 42 right now. I'd love to have 10 plus doors by the time I'm 50. again, a variety of units, Airbnb, buy and holds, multi-unit.
If you're a new or newer real estate investor looking to launch or grow your real estate investing business, please check out Investor Fuel Club. It's a coaching community, but unlike anything you've ever seen before. And you can actually partner with members of our mastermind from coast to coast on deals right in your market. There's no better opportunity to build a consistent business than to literally partner with pros to help you avoid costly mistakes, avoid the need for capital to do deals, and help you eliminate your fears as you're starting your business. Learn more about Investor Fuel Club at investorfuel.com/club.
Just kind of explore with that and see, again, some of the guys in the area that are getting into it are like, once you get to 10, getting to 20 is pretty easy. And it's one of those kind of games where, so try to get to 10 first, see how that goes, see what the portfolio looks like at that point, and then scale, based off of resources available and time.
Okay. So let's talk about kind of what our topic was today. And that's, you mentioned traditional banking models for investors, right? So now what most people are thinking, if you're not going to use your own money, you're going to either, go get private money, right? Or hard money. So talk to us about some, how the traditional model is changing.
Yeah, so I think the banking entities, the investors of the world that aren't private equity or hard money, are seeing that they're missing opportunity. That there are a lot of people that are going through creative financing routes, and more importantly, there's also people that have creative finances in general. They don't have the typical 9-to-5 W-2 salary income to qualify, and so they had to kind of scale and spread, their opportunity for their portfolio, to maintain margins and to maintain equities and to bring in more business. And so you're seeing, and I'm sure you guys have talked about it here, but like DSCR would be probably the most talked about program that exists for that. And the layers of that, because again, you're non-conventional, it's a non-QM loan. It's got its own parameters based off of investor appetite and risk. The sky's the limit. We have some, I think I told you gangster was the word I used, programs through some of our investors like Goldman Sachs. Who else do we got? SG Capital, eResi. I mean, just some of these companies that are really making, some of these terms really palatable for investors, where we've got, no prepayment penalty. We've got lower risk as far as points and fees go, lower interest rates, where it's like you got a hard money guy that's going to hit you with 12% and 2 points, and I can do 7.5, which is almost as good as conventional with 1.5 and no prepayment penalties. And the only thing that qualifies, right? Yeah, I mean, some really interesting stuff.
We'll talk afterwards about a property. And real quick, before we get more deeper into it, just explain real fast to our audience that might not know, what is DSCR loans, et cetera?
Yeah, so DSCR is the acronym is debt service coverage ratio, and so what essentially that means is the property qualifies the mortgage, and so as long as the rents and the property itself cover the mortgage payment, there's really only a couple other factors that we consider. We look at credit score, business credit score, personal, depending on which way you're applying. We look at reserves, so they want to make sure that you've got enough reserves for 6 months, 3 months. If you've got multiple properties, reserves for your other properties. Make sure you have the cash. And then beyond that, it's just based off the ratio. So it's a debt service coverage ratio. So DSCR usually is 1-to-1 or better, which means that if the mortgage is $3,000, that the rent covers $3,000, give or take. And then it usually scales up or down based off of that ratio. So if the ratio, for example, is 1.25 as opposed to 1.0, you actually get better terms. And then again, each investor has their appetite. So some of them will require a 3-month prepayment or 3-year prepayment penalty, where if you pay it off within 3 years, you do have a bit of a balloon. 5 years, things like that. Some of them have none. And then again, just like hard money, most of them do have at least a point or two associated with it, depending on the program. So,
What are the pros and cons versus a traditional loan, hard money loan, or DSCR loan?
yeah. So, I mean, the biggest pro obviously is that we don't look at your tax returns. We're not looking at your income at all. You can do it under an LLC, whereas, with many other conventional loans, it's tougher to find LLC financing, which again is why most people immediately go to the hard money thing, where it's like, okay, I can just join the business. No one's going to get in my world. No one's going to be, dissecting my finances with a fine tooth comb. Whereas now there's some opportunities to do that in traditional banking. So that's the biggest one,
Okay.
It also allows, if you are, let's say you're an investor that has been going the traditional route, like we talked about a little bit earlier, where you're house hacking, right? And you've bought and moved 4 or 5 times. And so you've got, 5 or 6 traditional Fannie Mae or Freddie Mac loans. At some point, when you get to 8 or 9, they won't lend you anymore. And so then you have to go like a DSCR route. And so a lot of the DSCR programs have no limits on that. The other thing is that we have DSCR programs that are, 85 or 90 loan to value. Whereas if you're going traditional investment, you're probably having to put 20, 25% down.
Yeah.
So you actually put less down, as long as, again, the rent comps qualify it, you're golden.
So if the property is $100,000, the rents have to be $1,000.
It depends on, I mean, it would depend on the interest rate and things like that. But
yeah.
I mean, if it's $100,000 at 10% and $1,000 a month, whatever it breaks down to, as long as the rent covers it on a 1-to-1. We even have some programs that go down to 0.75, which means you could actually be losing money. You just are paying a higher interest rate. So for those, and I've had some guys do that with like, let's say a long-term flip, where it's like, hey, this is going to take me 8 months. Traditionally hard money, and on our end, traditional investment loan, like you have to have it for 6 months or more before, that, to avoid that prepayment penalty.
Right.
If you're doing a long flip, it's kind of the same as doing a hard money interest only for a year. You find the one with no prepayment penalty, but you're paying 8% instead of 12%, and could be juicy. So it's all circumstantial, just like all these things. But there's definitely a lane there that I think that investors should explore. Most banks either have some sort of DSCR program, some sort of, we call it NONI, non-occupied, no income programs, or bank statement, or 1099, limited review, things like that. So there's options out there that you don't have to go straight to the hard money guy that's been giving you 12% and 2 points or 3 points every time you go around. Taking his pound of flesh out of you,
What advice should you give someone that's maybe going out, starting to look for loans, starting to, get into their investing journey?
I would say, and this is something that most, especially lenders in my lane, wouldn't tell you, but shop around. Different programs benefit different people. I've got quite a few investors. They use me, and they've got 3 or 4 other guys, and then it really just depends on, you kind of build a community in a portfolio that way, where it's like, hey, not one size fits all. There's no one, just like there's no one property that's perfect. There's no one lender that's perfect. There's going to be different scenarios that benefit different people at different times. And then, it changes. So just because a year ago you had a really good program with one guy, or your hard money guy was, the man last year, his appetite changes, his investors change, his capital to deploy changes, and that's the same in the banking world too, is based off of margins and where things are. Wells Fargo may jump in, and then another investor may jump in. A Truist may have a really, really, really awesome program for a while. Last year I think it was who's the Berkshire partner, PenFed which you wouldn't think from a credit union, but they had some really interesting investor programs for a while.
Huh.
Short term, it was only a couple months. They had an appetite for it. They filled their bucket and then they were out, and
Yeah.
if you don't ask about that kind of stuff, you'll just never get the opportunity. So,
Right. Okay. Well, very cool. Well, here's a quick minute for you to give a little plug about, why should folks give you a call and talk about this, and what makes you different than all the other companies out there?
yeah. So, again, Movement's the sixth largest retail lender in the country. We're in all 50 states. I don't own the company. It's a huge company. It's a Fortune 5,000 company, I think it is. But, one of the things that I personally, my website, glendongrose.com, super easy to find me. Glendon is a very unique name. It's pretty easy to Google and pop me up. But, one of the things that I provide, again, is resources. I have several hard money lenders. I have several resources that I like to share. I think I'm one of those rising tide raises all ships type of people. So
Love it.
if I can't help you, I'm going to try to find someone that can. And I think that creates a good community of communication where, we just help each other out, and so if anybody has questions that wants to just talk through things, I'm not in Idaho or out west, but I can definitely connect you with some people out there that, that may, whatever state you're in, there may be an opportunity there that you may have just not know about that we can connect you with. So
Cool. Well, Glendon, man, I appreciate you coming on here and sharing all that stuff. And guys, if you have any questions on some of these different models now for investors, because there's a lot of stuff that we see coming out. The DSCR, like I said, we've seen that. And I think that banks are getting more, I don't want to say loose, but bending and adjusting to maybe more of the investor world. Guys, I hope you had a great show. Glendon, thank you again. I'll put all your show notes or all your contact stuff in the show notes. So guys, if you want to reach out to Glendon, you'll have his contact information there. And I hope everyone enjoyed the show as much as I did. Glendon, thank you again. And we'll look to see you guys on the next one. Cheers.
thanks, John.
Thanks for joining us for today's Real Estate Pros Show. You can learn more about the amazing benefits of the Investor Fuel Mastermind community, including surrounding yourself with hundreds of other rock stars, 100% financing for your deals, and members-only discounts from vendors you're likely already using that, as a member of Investor Fuel, will save you more than the cost of your membership. Visit investorfuel.com to learn more. If you're interested in joining us as a guest of this show, please visit investorfuel.com/pros to apply. You can also check the show notes for access to free resources, how to get access to world-class lead generation, and much more. Don't forget to subscribe so you never miss another episode. Have a great day. We'll see you on the next show. Property insurance for real estate investors doesn't have to be difficult, but it does need to be there to protect you when you need it. MyInvestorInsurance.com not only provides insurance at 15 to 30% cheaper than traditional agencies, it's built specifically for real estate investors like you. You can set up an account in about 2 minutes, get quotes on properties, turn on and turn off insurance for your fix and flip or rental properties in around 2 minutes without having to talk to anyone directly, all through our portal. There's no better way or faster way to make sure you've got the coverage you need to protect you, and no more lengthy policies either. Once you're set up, you're billed monthly and prorated by the day for however long your policy is active. It's powered by MSI, the third largest independent MGA, with 1.5 million customers and more than $1 billion in cumulative premiums written. Get set up today in about 2 minutes at myinvestorinsurance.com/fuel.